welcome to Pivotal Traders. As some of you requested to share the technique which was used in today's trade, one thing I would like to tell all of you that we are doing only option selling, whether we have a view which is bullish or whether we have a view which is bearish. We are doing only option selling. One of the benefit of option selling is that you can possibly keep some of the option Greeks in your favor, and even if the market goes against you, you would be in a position to cut your losses or come exit even with the profit, even if the market is against you or with a minimal loss. So with the expiry yesterday, we had a range in mind that where the market would have expired. So this was the range which I marked, this complete range here, which was marked in the bigger blue line, but the market was lower bound and ended in lower range in the expiry. Basically, yesterday only I told that there has been a huge gap formation. Day before yesterday also there was a gap which was unfilled, and yesterday also the market opened gap down, and there was a huge kind of room for the market here. This whole area region, this whole gap was created, and I told you yesterday only that this gap should be filled within 2 to 3 days, and it was just after one day it is getting filled. So whenever the gap is filled, we have a resistance level which is marked over here, you know. So this was the main general idea, that the market has gapped up, and the market is getting exhausted. As you can see, the intensity of increase has decreased in the corresponding candles. So what happened is that I shorted around here. I took the short position on 22,500 call option around this level here, and I was just waiting, and you know, it was very interesting that the premiums were not decaying, uh, and I was just waiting 2 hours, 2.5 hours. So interestingly, one thing also happened, that I usually use 5 minutes and 2 minute candle to, you know, kind of develop my analysis. So what happened here is we started getting, you know, a fall rising wedge. I will draw it properly. So this was the range, and this was not able to make a higher high, and it went down, and then it was, you know, getting in a range bound fashion, and the more the intensity of increase and intensity of decrease was getting narrower and narrower. So this type of thing, you know, this is a rising wedge, which is a reversal pattern. And the next thing was the shorting of the bank nifty, and that I did by selling call option 22,500. So what happened is that as we exited the wedge over here, we got a downfall, and it is very much natural that your stop would be tested. So my entry point was here, and my stop was around here. So I was safe with my stop losses, because even if I exit here, the losses were almost negligible because of the options, you know. Some of the Greeks were in my favor because it took a lot of time for it to decrease or increase. So here what happened is it tested the wedge again, and then took a fall. Then again it took a fall. So I closed my trade around this level. I will tell you why. For this we have to move on to, I just used 2 minute chart for getting a entry and exit point, but my major analysis lies on 15-minute chart. So on 15-minute chart you can see that the wedge formation happened here, then we saw a huge red candle here, and then we see that the market came back to test the stops on the blue line, exactly on the blue line, and it took a hit. It took a hit and it took a hit. I sold the options around 198 and it was around 70, 170 around this level. My target was 163 and it filled over around here. Automatically it got filled and then it went up. So the major idea was that the market formed a rising wedge. I was bearish. I shorted it. Then there was a formation of big red candle after it tested a stop. There was a big red candle formation, and here I was pretty much sure. And then it was all this candle which made me very much sure what would be happening in the next candle. This is a complete inside bar candle which shows what would be in place, and the trend should be in your favor. So the trend was decided by the larger candle, and inside bar just confirmed me that there is a conviction in my trade, and I continued it. So I was just trailing my stops, and boom, here we got the hit, 163. And it doesn't matter where the market goes after that. This was the target because it was near to the 20 moving average on 15-minute chart, and this was also the target because you could see that 5-minute chart, it was just below the 5-minute moving average around here. So this was the idea or logic behind today's trade. Thank you so much. Please do subscribe to the channel. We are just growing. You can also follow us on Telegram. The link should be in the description. Thank you.